Good morning. Welcome to Stock Market. Today it's Tuesday, September 15th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the great content for this show. Also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So let's dive in as U.S. equities were higher in Monday's trading, ending just off the best levels of the day. All sectors higher, led by REITs, technology, and materials. It's quite an eclectic mix at the top of the list, but that's what it is. Energy and consumer communication services lagged the broader tape. Treasuries were a little changed with a touch of flattening. Dollar was weaker against the yen and the euro. Gold was up 80 basis points. Remember, we still like the precious metals. We think it's going to resolve to the upside. Crude oil down 20 basis points under continued pressure. As we get to the desk this morning, though, futures are up 80 basis points following through. Those are S&P futures. NASDAQ futures up more, trading near the best levels of the morning. Asian markets were mostly higher overnight. South Korea, China, and Taiwan leading, while Japan lagged. European markets are higher. Treasuries are mostly weaker. The dollar is a bit better against the yen, but lagging on the euro cross as well as sterling. Gold is up 50 basis points. Crude oil snapping back a little bit, up 1.7%. As we dive in on the major averages, it's got, let's start with the Qs in the middle. I probably should have made that the big chart today, but I didn't. I apologize. Qs hold 270, and to me, that sets up a compelling risk-reward trade. For those who are just looking for broad exposure, back into a theme quick, I like long Qs above 270 playing for the highs. It's clearly defined, folks. Risk 5 to make 25, and that's the trade. Qs go below 270, you sell it. Pretty compelling risk reward there. I think it looks interesting. QQQ holds 270. Did the dance, held it. IWM standing strong at the 150 level. Take a look at IWM holding 150. Tried to undercut it last week. Rallied hard. 153.08 close yesterday. So now we're just waiting on S&P 500. Dancing with the key 3,400 mark. Bulls want a quick retake, and they want it soon. To me, you're actually starting to see the picture come together, right? Whether it lasts, who knows? But we have to play the odds, right? Qs hold, IWM hold, working higher. You should be looking there for long ideas now. They held the level. S&P 500 at the level. Retake 34, you got to start rotating back into your bullish ideas. Where's the leadership? Amazingly, my sector work today, tech is still leadership. It's gotten hit a little bit, but it's still leadership. What's happening is it's working off an overbought condition with some rotation into other areas of potential leadership, right? Go back to late June, early July when I started talking about materials. Well, still a trade. Everyone else is waking up to it now. Industrials are also interesting. A lot of people have been talking about transport companies, right? Part of the industrial complex. We start to see a little bit of a stabilization in the airlines. I have not been as vocal about the industrials as some have been. It's been a good call. I'm waking up to that one now. Take a look at those sectors as possible rotation ideas. Let's get into our market in a minute. What are we writing about today? Well, we talked about IWM and the Qs making a stand. SPY still looking for 340. That lines up with 3,400 on the index. Tech's relative uptrend is intact, but still extended. We'll take a look at what that means. Materials break a downtrend from 2017. That's on a relative basis. I go into a much more clear picture of it in my note today. You should be getting our 2-week trial so you can see my notes. Discretionary strong without Amazon leading, and that is really interesting. Futures, as I said, point to a higher open today. Dow, S&P, NASDAQ, small caps. Let's dive into the power bars for the major indices. Dow up 1.25, 8 to 2 bulls to bears. S&P 136.73. Not a ton of change here on the day-to-day basis. All still bullish. All saw a lot of deterioration over the past 2 weeks and are trying to rebuild. NASDAQ up 1.75, 24 to 8 bulls to bears there. Small caps, quick snapback. Big outperformance yesterday on the part of small caps. They doubled the performance of the S&P 500. Big day there. And it was across themes in small caps. As I was doing my work last night, small cap value, small cap growth. It was the whole small cap spectrum had a nice day. yesterday. We'll see if they can build on that. Go back to the IWM chart holding 150. 646, 290 bulls to bears there. Bonds flat. REITs, your best performing sector. So we had a nice rally day in the markets led by REITs. 2 to 17 bulls to bears. So make of it what you will. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes are mixed. Stocks of the day. I'm going to start doing this on Tuesdays and Thursdays now because I've gotten a ton of great feedback on the screens. People like the idea generation. So screenshot this, save it, whatever you want to do. The screen that I ran here today was watching the Qs hold 270, become oversold, and then rally. Made me want to dig in on some of the tech areas within Chaikin Analytics. So I drilled down on our subsectors that are leveraged to tech. It's a feature within Chaikin Analytics, but you kind of get what we're going to, right? Software, semis, telecom, hardware, right? It's all there, okay? And I wanted to look for the names that have a neutral or better rating in our model, our 20-factor model. Stock rating is neutral or better. What I wanted were the names that are oversold based on our indicator. So those who are longtime viewers of this show, you know my overbought, oversold indicator that we use. You know I talk about being above the long-term uptrend. So essentially what I'm looking for are names that have become oversold within the context of an uptrend. This is a way to quantify I'm a buyer on pullbacks, right? You hear that statement a lot, and it drives me nuts because people will say, well, I'm a buyer on pullbacks, and they'll never quantify it for you, right? So this way they can never be wrong. We're going to quantify it for you. We have our overbought, oversold indicator. So oversold above a rising long-term trend line quantifies, not specifically with a price, but with a setup, quantifies where you want to be a buyer of a pullback. And ideally, you want stocks with strong relative strength. So take a look at these 26 stocks. Some high-profile names on here. Apple, Adobe, Amazon, Alibaba, Salesforce, Facebook, right? Tesla, Workday, Square, NVIDIA. A lot of work you could be doing right here just on these 26 stocks. Take a look at them here today. Let's dive into the sector tracker now. Moving to the major sectors over the last 5 days. My two favorite cyclical groups at the top of the list. Surprise, surprise, I'm not. Utilities, REITs, healthcare, and discretionary are also higher over the past 5 days. Energy at the bottom of the list. Surprised? I'm not. Comms and tech, I'm looking for those to stabilize and begin working their way back up the ladder. Financials are interesting. We want to be paying attention to the financials here this week. Big Barclays financial services conference going on. And some of the bank C-level management at some of the big banks did not sound that upbeat at the conference yesterday based on what I'm reading. So watch the banks, pay attention to the financials. Big conference going on. Management teams are out there talking, so pay attention. Staples down over the past 5 days as well. So if you're bullish equities, seeing the staples underperform is good. Our industry in focus today, oil and gas equipment and services, which I cannot believe actually has a bullish ratio. 7 to 5 bulls to bears, though it's lagged over the past 6 months, down below the S&P 500 by 12%. Ranked number 13 of 21 subsectors. If you're looking for ideas, and hey, some people do, so you might as well, if you're going to go bottom fishing, which I don't advise, you might as well look for the bullish stocks. Select Energy, National Oilwell Varco, and Baker Hughes are names that you may want to consider in a group that still looks very much like this. Okay, not great. And now we have oil rolling over. The best thing I can say about services here is that they're oversold. Okay, they're oversold. So to me, this is just still a train wreck of a group. Trend is strong above the trend line, but I mean, just a mess. Bearish money flow, underperformance. I'm good here. If somebody wants to dive in and do the work, I'm not going to fault you. I think that there are probably better opportunities to be had in higher quality companies with better balance sheets and higher quality management teams. That's just it. That's how I view the world. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Kohl's at the top of the list, KSS, along with TPR, Host, and Phillips Van Heusen. I think a lot of this had to do with some vaccine chatter yesterday, giving a bid to the reopening trades. We're going to talk about retail a little bit as it relates to discretionary, because interesting dynamic at play in discretionary, even as Amazon sells off. So let's hold that thought. The other group the other stock that's on the leaderboard up 7%, AIV. Company specific news there is that they are splitting the company into two separate REITs. So to the extent you're into REITs and you want to do some work, you have some reading to do, as now we will get two separate entities. Loser side of the board, Citi, down 5.5% as their CFO presented at that Barclays conference yesterday. And just go in, you can start to read some of the recaps, I'm sure. My understanding is the commentary was not that compelling or not that encouraging coming out of the C-level executives from the big banks at Barclays, at the Barclays conference, not Barclays company themselves. Kroger, labor agreement, I didn't dig into it, down 4.5%. CAH, the New York opioid law was upheld, likely pressures Cardinal. Chipotle, what we're seeing, honestly, is a rotation a little bit into the more beaten down names within the restaurants, right? So Chipotle and Domino's under pressure yesterday, but I'm seeing interesting setups in some of the other areas. Take a look at a name like Shake Shack if you're looking for some compelling rounding bottom potential setups. Finally, JBHT down 2.3%, nothing company specific there. So let's get some perspective on the charts first and foremost. I know it's easy to get a lot of attention by talking about the scary rotation out of tech, which has been an absolute monster of a leader for 2 years plus, right? Lining up largely with the growth theme being a monster of a leader for 2 years plus. So, if you kind of want to call attention to yourself and get a lot of headlines, you'll put things out like tech wreck and talk about the massive rotation. So I like to put things in perspective, and here's tech relative to SPY going back 2 years. This massive rotation that everybody's talking about has taken us back to the rising 50-day moving average. Right? The best part is it's something that happens quite frequently. Maybe this is the time it breaks through. I don't know. But this trend is still up. Look at the RSI of the ratio. That is still in bullish ranges. This has not become oversold in nearly 2 years. Why don't we defer to the trend for now? You've got Qs holding key support. I gave you a list of 26 stocks that you could look at within the space. Maybe a compelling risk reward here. If you risk manage properly and you're wrong, you won't lose too much. To me, I think it's a high probability trade to set up to the upside. How about those materials? This is just unbelievable. I do think there is money flowing into other areas of the market though, right? It's not, I just think it's just not the one-way bet it was, but it's not binary. It's not tech or cyclicals. It's not growth or value. Do the work. Like I said last week. Find the cyclical groups that are working. Find charts that look like this, materials. On the verge of another 52-week high, RSI in bullish ranges and holding, giving a momentum confirmation to the trend. All while XLB relative to SPY has broken topside. It actually, if you look at my note, it breaks a roughly 3-year downtrend. So we still like the materials, and a lot of people are waking up to it now. And then finally, here's discretionary. Discretionary on a relative basis, trading near 52-week highs, even as Amazon does this. And retail holds strong. I think there's some interesting opportunities out there if we're willing to broaden our horizons beyond FanMag just a little. That's going to wrap us up for today. Have a great day, everyone. Take us for a test drive. I'm going to be back with you tomorrow.